What's up, everyone? Welcome to Growth Channel. Today we have a very interesting topic. We have our special guest Alejandra. We're gonna talk about credit repair. So, Alejandra, thank you for coming to Growth.
Thanks for having me.
So, Alejandra, tell us a little bit more about you. Where are you from?
So, I'm from Farmersville, California, which is a very, very small town in Tulare County.
Born and raised.
Yes,
So, how was Alexandra growing up?
I was,
Did you like any type of sports? Anything in particular that you liked?
yeah. So, actually, fun fact I played baseball since I was 4 years old, all the way through high school, and then it transitioned to softball. I played volleyball, basketball, so very athletic.
Did you win any like trophies, anything like that?
Oh, of course, every year.
Really? Every year? So why did you decided to do that? Did you like your parents got you into that, or did it always just kind of grab your attention to do the baseball?
So my dad put us all in sports from a very young age. So it was his. He didn't have that growing up, so he wanted to instill that with us.
When you say us, is that like your siblings?
Yes, I have a big family. So my dad has 8 children.
8 children.
Yes.
Oh wow. Are you like the middle child?
So around there, I have two older siblings, and then me, and then I just have two brothers. The
Two
rest
brothers.
girls. Yeah, lots of girls.
Wow, that's interesting. Now, do you guys all do credit repair?
No, I'm the only one.
Got it, got it. So what made you get into the credit repair industry?
So I have a background in financial services. I've been in accounting for over 14 years. And then I had got into the insurance industry, which opened the doors to a lot more, versatile set of clients and different needs and issues that were coming up. And it was something that I personally had to work on at one point in my life. And I had a really good experience. And the person who fixed my credit, I just kept reaching out to him, like, teach me your ways. I want to learn this to offer the service. I knew so many people that could use it.
Right, right. So you did accounting. So tell us more about that.
Okay, so I was originally going to college for psychology. And, obviously college takes a long time. And I came across someone who had been in the accounting program, told me there was a really fast program. And at that point in my life, I needed to move quick. I needed to get into a career. And so I went to a trade school for accounting. And before I graduated, I had a job with a doctor. She had went to go see me speak at a board meeting, and it just really took off from there. And I had been in the field ever since. I worked for a college. I did scholarship and foundation. I approved scholarships. So accounting opened the door to a whole, world of financial services.
Wow. So that got you into the insurance industry then.
Yes,
Huh.
it did.
Interesting. So what did you like the most about doing accounting work?
Numbers don't lie.
Okay. Agree.
It's straight to the point. I mean, and I didn't have to work so much with the public or customer service. It was more quiet, to myself. I loved just me and my Excel spreadsheets.
Right. So that makes a lot of sense why you're doing credit repair now. Numbers don't lie, right?
Yes.
Now you put an interesting topic the other day on your social media. You asked the question to the guys and the girls, right? You said, "Hey, would guys date girls with bad credit, and then would girls date guys with good credit?" What do you think the answer is to that? Now that you deal with all those accounts all the time, what do you
Yes.
think the answer is to that?
So, number one reason for divorce is financial. Okay, so that's number one. Um, the responses I received on social media were conflicting, right? So a lot of men responded that they didn't care where a woman stood with their credit. Women, on the other hand, have certain experiences and we're like, nope, we're not letting him use our credit. We don't, if he has bad
Wow.
credit, it's a sign, right, of irresponsibility.
Red
So,
flags.
yeah, so it was a good conversation starter for sure.
So tell us more. We want to know the cheese. Tell us more. We want to know.
Yeah, well, I got some stories. So, a couple of women had responded that they let their boyfriend use their credit or they either co signed for a car. Of course, relationships don't always work out. They broke up. She got her credit ruined.
That's a
Right.
really
So,
bad way to ruin your credit, right?
yes.
So would you say it's not wise to allow someone else to use your credit?
I recommend to never let anyone use your credit.
When would be a good time for someone to use their credit? Because they're obviously not our relationships. Now we're talking like personal relationships, right? Now, if you have kids and you want them to grow their credit, correct me if I'm wrong, but you could put your kids under your credit card so by the time they're 18, they could have a good credit. Is that correct or am I wrong?
Yes, you're absolutely right. So that is a situation where you would want to help someone that is your child, right? And hopefully you're educating them, teaching them good financial responsibility. So that would help your child if your credit is good. You don't want to add them to your credit if your credit's bad. But if you're in a good position, yes,
Why is
that's
that? Why is that?
so if you were to be in bad standing with your credit and you added someone as an authorized user to your credit, you're not going to help them because they're attaching to that bad credit as opposed to attaching to good credit.
Hmm. So why should someone, because most people they have no idea they could do this for their children, right? Why should someone do that for their kids?
So they want to get them started out into adulthood on the right foot. So a lot of us, especially where I come from and culturally, we're not educated on finances in general, right? We're just trying to survive a lot of the time and make a living. So they want to start their kid out with the proper information. They want them to understand credit, understand what it offers and what it could do for them.
Now, did you do that for your children?
I'm starting to. So I have my son who is 18, so he is attached to my credit. Yes.
Nice, nice. Now, you only have one kid, or you have
No,
more kids, right?
yes. So I have four children. My oldest is 18, and then that's my son. And then I have three daughters that are 16, 13, and 10.
Now, tell us a little bit more because see, if I'm not wrong, you're a single mother, right?
Correct.
Now, how do you run a business on credit repair and still take care of your children by yourself? Because a lot of people, especially women, I'm not saying all of them, right? But they make their kids as an excuse on why they can be successful. Now, you have something to say about that?
I do. Every situation is different, right? So I've encountered people that have given a lot of excuses for whether it's a job opportunity, a business opportunity. But for me, my children since the beginning have always been the reason for me to push harder, giving them a certain lifestyle and the pressure to keep up or increase it, right? So I never wanted to fall back. And every time there was an opportunity for me in business, I took it. And I love for the business to be able to work around my schedule and also provide that education for my children at the same time.
Got it. That's interesting. Now, you have always been like in the financial services industry, right? In
Mhm.
general, this also kind of applies to financial services. When did you decide to get into credit repair? I know you mentioned there was somebody helping you out. You constantly contacted him. So tell us more about that. Like, what made you get into that? Like, why? Like, really, why?
Mhm. So growing up as a young mother, obviously small town, not a lot of financial influence or education. I was always interested in learning. Always everything that I can learn about money or growth or anything, I was always on it. I had my experience also with bad.
So what made you really start credit, like the credit repair? I know you constantly talked to you had someone that you constantly contacted him to ask questions about credit. But what really made you want to do credit repair?
Okay, so going back to the beginning, I was a young mother, so I had to learn a lot of hard financial lessons along the way, right? Whether in business or with my personal credit. And I had experiences with different types of credit repair companies, some good, some, not not the worst, but recently this last year I had encountered someone who was able to help me very quickly with my credit. I needed a little boost, and he was able to help me quickly. He did. Everything just worked out amazing and perfect timing for me. So after that, I was just constantly reaching out to him to teach me his ways because I'm a student of life and everything that, can help people or help me, people close to me, the community, I want to learn it. So he finally offered me a course, and as soon as I did it, I got my first client the next day. um,
Wow.
I was excited to start implementing it and helping people. And that's really why I do the businesses that I do is because it's helping people. That's what a passion of mine is, just to educate, influence, and impact people.
Huh, I agree 100%. Now, you mentioned you had some struggles when it comes to credit, right? Would you like to share some of those struggles that you had?
Yes, so I learned the hard way. Helped people co-sign, and also, in a relationship, shared credit cards or allowed them to use the cards, and of course they're gonna pay it. And when things didn't work out, that didn't get paid.
Mm,
And then I was stubborn at the time, to be completely transparent. I was like, "This is not my debt. I don't want to pay it. I'm not. I'm gonna let it go." It was a mistake being stubborn, but also I learned a lot through that.
right, right. So you don't regret it, right?
No.
Okay, cool. Now it's I brought you into the podcast because obviously you know that I'm working in the dealership, and it's kind of interesting because people when they go to the dealership, sometimes they come in and they think because they have cash, they could get like a top of the like model car, like the
Mhm.
best car out there, right? But it doesn't always work like that if you're trying to refinance. Obviously, if you're gonna pay cash, well, yeah, you're gonna be able to buy the car that you want
Mhm.
if you have the money for it. But most Americans don't have that type of money to just drop on a car. That's why everything's almost refinanced in this country, right? Now, credit is very important. Why? Because I seen people come into the dealership thinking like, well, you know what? I don't need someone to co-sign for me. I want to see if I could get approved. And then unfortunately, I got to see some people that leave and they're super sad because they didn't get approved by the banks. People forget that's a privilege.
Right.
That's huge.
Mhm.
Like, don't let anybody tell you that you not having good credit is important, right?
Right.
But there is those people who have great credit scores who have like very low interest rates when they buy a car, and sometimes they even come with no down payment, and they'll leave them the cars just like this, right? Why is that? Now, I know you know about credit, right?
Mhm.
Obviously,
Yes.
but what are some of the credit differences? I like because it starts at what? Where does it start? This credit scores.
So the low, you can be in low 300s, and the best score is a 850.
Mm,
So, you talking about the dealership is huge, because that was a reason why I needed a boost in my credit, because I was ready to get an SUV for
for
myself.
family, yeah.
Yes, and we are ready to upgrade, and it was a beautiful experience having good credit going through that process, because again, like you mentioned, I didn't have a down payment, and my payments are so low. I have not met anyone who has a payment as low as mine.
What's your payment if you don't mind me asking?
It's 370 for an
Yeah,
SUV,
yeah.
so
For an SUV. Okay, that's pretty good. Not bad at all. That
yeah.
means you have a good credit.
Yes.
So, how could someone have a 350 credit score?
So it's not always necessarily just bad habits, or collections, things like that. Some people don't know how to build credit, right?
Right.
So over time, as you get older, you should be applying. We get the wrong information. So some people say don't get credit cards. You pay everything with cash. That's a
Mhm.
mindset. But when it comes to the credit bureaus, it's not going to help you. It's going to set you back,
Yep.
because if you're not using anything, they don't have any proof of you being responsible.
You're like a ghost.
Yes,
With that,
exactly.
we see that at the dealership a lot because people get told, "Oh no, credit cards are bad," right?
Hmm.
So yeah, keep going.
Yeah, so that's one of the reasons, so they can get set back by not building any credit whatsoever. Again, any collections, if they don't make payments or pay their bills, the companies can then sell their debt to someone, and they go to collections. That gets reported to the bureaus. Late payments are really huge on setting your score back. So if you miss payments on your credit cards, your car, your home, anything like that, that's gonna push you way back.
Wow.
Mhm.
So how can someone who's at a 350 credit score build it to an 850 credit score?
Ooh, so it's gonna take some time. It's not an overnight thing. If someone is extremely, extremely low, I mean, I'd have to do an analysis over their entire credit, profiles across all three bureaus, see where they stand, and that's where I do a plan of action. So that's their first step that they would have to do. Especially if they're not educated in credit, they definitely want to seek the assistance of a professional.
Right. Now, that's one way to go about it, right? If obviously they don't know. But what if someone like, I'm sure people here will appreciate you more if you're like 100% real and you give us some of your secrets, right?
Yeah.
So if they choose to do it by themselves because they legit don't have the money to like build credit and stuff, what are some habits or some things that they could do to build their credit without having to pay to somebody?
Okay. So the number one thing I would recommend to someone who is not in a position to pay for services or assistance is to pull your credit reports off of annualcreditreport.com for free. They give it to you. So you'll get all three reports. You're going to get a highlighter and you're going to go highlight every negative item that you have on your report. So that's going to be their starting point. Okay. And then after they get every negative remark, they can look up online certain letter templates that are free for the basic services, right? So then they're going to write their letters to dispute these accounts, whether it's a late payment, a collection, and then they're going to send those off certified mail. So what that means for people who don't know is you go to the post office, you let them know you want to send it certified. It gives you a stamp on when that company received it, because at that point in time the company has a certain time frame to respond to you, otherwise they have to immediately take it off.
Wow. So, see, tell us more. We want to more. Hey, these people want to win.
Yeah.
What I mean? I'm
Of
sure
course, of course.
people will appreciate you more when you just open to them, right? Because not everybody wants to do their secrets.
Mm-hmm.
It's like me and you were both in the insurance
Mm-hmm.
industry. We know what it feels like to come across a client and they don't qualify for life insurance,
Mm-hmm.
right? But it's better to just be straightforward and tell them, look, this is how it is. This is why you can qualify. This is shows on your RX record. Like, we're straight up forward with them, right?
Right.
Not a lot of people do that with credit because everybody's trying to take money from everybody,
Exactly.
right?
Mm-hmm.
Unfortunately, that's how it is, though. We're in America, right? It's everything's a business. You want a car? It's a business. You need money for almost everything, right? Now, is there anything else someone could do? Let's say someone who's like young, they're 18 years old, fresh out of high school. They're like, all right, I don't have help from anyone. My family doesn't have good credit, right? They don't know nothing about credit, right? They're just like, well, I see these numbers. Most people don't understand that. They
Uh-huh.
don't understand what credit is.
Right.
Now, how could someone who is young build their credit? Like, what are some of the first things that they could do? Like if with the knowledge that you have now at your current age, if you were 18, what would you implement to get your credit to 850?
Okay, that's a good question. So, and this is again free game. This is information that you can either pay someone or learn the hard way, right? But if I'm talking to someone who is 18, fresh out of high school or maybe starting college, I would advise them to apply for a credit card. Okay, so if
Any credit card?
yeah, so a lot of people have a misconception on the secured credit cards. I don't know if you know what that is,
That's
but
how I started, yeah.
okay, yeah. So you can, and that's actually a pretty smart way to go about it, because if you don't know your spending habits, it restricts you, right? It gives
Right.
you a certain amount. So I would recommend to someone young or someone who doesn't have any credit at all to get a credit card, whether it's secured or not. You need at least two. So to build a healthy profile, you're wanting to get two credit cards. You want to have an installment loan short term and an installment loan long term. Okay. And what that
So
is,
what does that mean? Tell
yeah,
her more.
so an installment loan short term, you may have heard of it, like these new apps that are out, like Self or Kickoff. So it's basically a secured loan. You're paying into this each month, and the payments are super cheap, maybe $20, $25, and they report to the credit bureaus. So they're going to report that you're making these payments on time, and it's going to show as positive history on your credit reports.
Interesting.
A long term installment loan is like a car, right? If someone goes and buys a car, obviously it's going to take a little longer for that to show positive, like in a positive way on the reports, but ultimately long term it's going to benefit them.
What about a house?
How Same thing.
That's a
So that's
long
a
term
long
one.
term loan.
What are some other short term ones?
So you can do. There's like, I don't know if you've heard of this, like affirm purchases, like afterpay. Let's say you find something that's $1,000 and you're gonna make payments. Those also report to the bureaus. Another thing is people use them very often. Like I'm gonna go to Amazon and finance a $200 order every month. Like,
People do that.
yes, and it
Oh
does
my
not look
god.
good because
No, it doesn't.
it looks like, okay, this person can't afford this. right? It's
Yeah.
meant to be a little bit bigger and over time. So,
But it's funny because the credit card companies they offered you to do that.
mhm,
What do you think? Obviously, we know that the credit cards are they're trying to keep us, they're trying to make their money too,
right.
especially with their interest and stuff like that.
Mhm.
Now, what are some other stuff? Tell us more.
Let's see. So you would want to do that. And also, so we went over the credit cards, the installment loans. What else can I think of that you want to have?
Because the way I started right now, correct me if it was
Okay.
smart or not, but I went to I bought some earrings for my, I bought some earrings for my mother, because I didn't have no credit, and then I went through a bank to get a secure credit card, and I had those two lines of credit, and then right away, like maybe less than 6 months, I kept making payments, and I had a good credit score, and then I went and got a car, and they gave me the car like nothing. Well, I gave a down payment, but it
Mm-hmm.
was like you're approved, right?
Mm-hmm.
So I never really had an experience where they're like, oh, I didn't get approved. And that's when a lot of people think, right? Because it doesn't happen to you, it doesn't mean that other people get approved,
Right.
right? They forget that.
Mm-hmm.
Now, was that smart for me to do?
It was. Again, that's not something that I throw out there as a recommendation, especially these days because, people will just go buy jewelry all the time and think
Right, right.
that that's their credit profile. It is a good line of credit to have, especially if you're responsible with it. Yes.
So what are some good lines of credit?
So you could do again, just I mean, if you're purchasing, let's say you go to like Sears, J.C. Penney, something, and you get one of those
Cheers, went
credit
out of
cards, right?
business.
So,
But yeah, yeah, like
okay,
a store, yeah,
I'm
yeah,
trying
yeah.
to think of
No, no,
yeah,
yeah,
think about
I get you.
just yeah, things like that. Somewhere where you're gonna finance. Jewelry is an option. Um, who knows? Like the little golf cart, something, something that
Okay.
you of your interest, but that you're financing and you're being responsible. Also understanding interest rates. So that's huge when people get into credit problems. Is they may not understand on a loan they may have 10% interest, 15% interest. They also may get 30, 40% interest, which is crazy. So that's huge when going into installment loans or any type of loan is understanding what the interest rate is and what that looks like for you.
So what is the interest rate? Obviously, I know, but the we want the public to understand it. Someone who's barely learning about credit, because some people come to this country, like an immigrant like myself, comes to this country. We don't know none of this stuff. We're
Right.
not educated. Small towns usually don't.
Mhm.
They just do what their parents do, right? And sometimes their parents are wrong, unfortunately, right? Because they're naive. They're not educated on how finances work. Now, what is interest? What's an interest?
So interest, the best way that I can explain it is a fee that a company, bank, organization is going to attach to a purchase or loan in return for providing the product or service. So, for example, let's say a credit card company, which is the easiest. Let's say you have a $200 credit card and you used $100 on it, right? And then your bill cycle closes out. You get your statement. Anything that is over a certain amount, they're going to charge you interest for letting you use that money ahead of time because basically you're borrowing. So they're gonna charge a fee, and that's different with every company. So you'll know some credit cards are, usually around 19.9, going up to 29.9,
Have you
even
seen some
higher.
hires? What's the highest you've seen?
For me, when I'm doing the analysis, I don't necessarily see the rates, but I mean, just shopping around for credit cards and stuff, sometimes high ones I see are 29.9 or
Really?
above. Yeah,
I've seen 32.
yeah.
Uh, that's just insane.
Hmm.
Now, what do you think about this little trick, right? If someone has a credit card and they have it maxed out and they legit can't pay for it, let's say they give them 10 months, 0% interest, but they're like at the 10-month mark, they're like, dude, I'm about to start paying interest like crazy. Let's say 29%, 27% interest on all. Let's say it's $3,000, just an example, right? What if is this smart? Now, this is a question for you, right? Is this smart? What if they say, all right, I'm gonna open up another credit card and then I'm gonna do a transfer so that way they could avoid paying interest. Is that something smart to do?
So it can be. So if they get a card that has a higher limit and offers balance transfers, because not every company will offer a balance transfer, that is smart because then you're moving it to another account that buys you some time to where you're not going to be charged the interest at a very high rate.
Hmm. Interesting. Okay, now let's go a little bit more deeper into credit, right? We have personal credit and then we have business credit. And I
Okay.
believe you understand both, right?
A little bit. So we're gonna be launching soon some business credit.
Okay, cool. So you're not too familiar with the credit with the business credit
Uh,
because you
I'm
specialize on the personal one, right?
right now. So I'm in the middle of courses for the business credit to once we finally launch it, we'll be able to more confidently speak on it.
Right.
But I mean, there's some basics.
Not a problem. Let's stick to personal credit, right? Now, who are these people who have 850 credit score? Like, who are these people? Because everybody thinks it's the rich people, right?
Mhm.
That's not necessarily true. Can you tell us more about that?
Okay, so I've encountered quite a bit of different type of people that have good credit. So there's the person that was raised with the education, right? Their parents put them on their credit. They started out understanding it, utilizing it, and being responsible with it. Then there's the person like me who made some mistakes, had to learn the hard way, went through, getting denied or high interest to finally getting it on track and feeling what it feels like to have good credit and never wanting to make those mistakes again. Then there's the people who just by chance have, later on in life encountered someone who gave them some information like, hey, get this card, pay this, I just had a conversation with someone like that. Also, it was like a mentor that came into their life, kind of just gave them some tips and they ran with it and started researching. So a lot of it is you're raised with it, you learn through it, or you search for the information yourself.
You know, it's interesting because I don't understand why people wait until they're older to figure this out, right? Like, it makes no sense. Like, don't you want to learn how to get to 800 and I don't know, that's just me, right? Like, I want to learn, okay, how can I get to 850 credit score, you know?
Yeah.
But it's like, why do people don't look for this information? It's all out there. It's just like a path, right?
Hmm.
Because if you don't learn how to do this, when you say I learned the hard way, which I did too, because I didn't have no one to teach me, I had to go and find out, right? But when you say learning the hard way, you that just means you're losing money.
Hmm.
That's all it is.
Yep.
And I'm sure the people who been through it, they know it's like, dude, I lost this much money, or
Hmm.
I'm still stuck for a few years paying this credit card, and they don't know about transferring over. They don't know about this stuff. Some of them didn't even read the contract. They're like, dude, now I'm paying credit card interest. Like, this makes no sense.
Hmm.
And then they're all turned off about credit cards, but it's not. It's how you use it, right? Now, can you tell us? Tell us, who are these people? I really want to know. Like, if I don't know, obviously, but who are these people who have those 850 credit scores?
Those are just I mean, responsible people. Responsible. Again, it's hard to say because I wouldn't call someone irresponsible if they came to me with bad credit. Um, for me growing up, I didn't know anyone that talked about credit. So like for
Right.
you, you mentioned, I wanted to get high. What what experience did you have or encounter did you have that made you think of 800 or 850?
Why not be in the top?
Okay.
Right? Like in anything. That's just me though. Like, you know what I mean? Why not be on top of everything? Like, if there is someone who has that,
Mhm.
why can you not?
Right. But
Like,
did you go buy a car for like what made you like what informed you on 800 or like what to aim at?
well, I mean, when you look at the what do you call them, burials or whatever,
Okay.
when you look at the three ones, right?
Uh-huh.
Like, they all have like numbers and stuff, and I'm like, I wonder what these people did to get to that level.
Okay.
Now, I started doing my research and doing things like that that started working for me. Now, one time I had like this little attack, like little panic attack, because I was so into like building my credit,
Mm-hmm.
and I missed a payment, but I didn't know this. So, dude, my credit score dropped like 70 points. I'm not even kidding. That happens, right?
Late payments are one of the worst.
Oh my
Yeah.
God. I was like, it took me this long to build credit because your credit takes a while to
Right.
grow. Like you're making payments and payments, and then you only see like 1 point, 2 points. You see like little tiny points, and then you're like, it dropped like 70 points. What does that mean? Like, what did I do? Right? But I didn't know that all I had to do is like, hey, I call it the burials or whatever. I just missed the payment. I'm always on top of my payments. Can you just get it fixed? I'll make the payment right now, and then I make the payment, and they get it back up to where it was.
Nice. Yes, that's an option too for
People
anyone.
forget that.
Yeah, for people that, missed a payment or anything, you always can reach out to your credit card company or loan installment company and ask them for, you know, um, to remove the remark and make your account in good standing. Because, of course, they want to keep you in good standing. They want to have you as a customer and make sure that you finish paying it off.
Now, I want to touch base on this. What what happens when someone goes crazy with credit cards?
Mhm.
Right? They go to Marshalls, they go to all this. I'm not talking bad about Marshalls, just saying, right? Like, I'm saying any store in general that provide credit cards, right? Because usually when you go to the store, you're like, hey, you get a discount if you get a credit card with us, blah, blah, blah. What if someone goes crazy and just gets a bunch of credit cards? Let's say they got 36 credit cards.
Mhm.
What can they do? Like, what happens then?
Okay, so that's a piece of information people may need to hear as well is applying for credit, whether it's a credit card or anything else, you're going to get a hard inquiry. So the hard inquiry is going to affect your credit. Not as long term, but maybe 3 to 9 months, depending on what it is. It's going to show up and affect your credit. So you wouldn't want to go apply for 6, 10, 15 cards, right? Just like I said, with building a healthy profile for someone who is not educated on credit, you would want to start with around two. Get those two in good standing, make your payments for 6 to 9 months. After that, the companies are going to look at you better and you're going to be able to go apply for that car or, something bigger.
Right. Now, if they did do that, what can they do to erase it out of their credit report?
Okay, so they can't erase the credit cards or the money they're using on the cards, but they can. There's certain disputes that are available online for free that you can mail out to the credit bureaus to have those hard inquiries removed from your report.
Right. But that's a lot of work.
Mhm.
That's a lot of work. And that's why, if you don't know how to do it, then that's when you come in and you ask a professional, hey, how much you charge? How can you help me? And then that's your work. That's the
Right.
work that you go in there because it takes time. People say, oh, I'm gonna just do it by myself.
Mhm.
But people are procrastinators. They leave everything to the last minute. Now, I'm not saying everybody, right? Don't get offended, guys. But that's for the most part, that's what happens, right?
Right.
Now, what what do you think about people who get credit cards? They're like, I don't want to use credit cards anymore. They pay it off. Let's say they have maxed out or whatever, or they keep it under 10% or whatever. It doesn't matter. Like what I'm trying to get at is like, what if they say, I just don't want to deal with credit cards anymore, and they just go and close all their credit cards?
Okay, so that's not good. If you go through the process of getting a hard inquiry, getting a credit card, having it open, using it and then paying it off, um, that can affect your profile if you close it. So the algorithm with credit reports, especially when they're running them, is they want to see you in the system. They want to see you using the credit that's available to you. So if you have a credit card, and that's another thing is you also don't want to pay your balances down to zero, um, because the next report it may pick it up as you have closed it or it's not available to you anymore. And let's say you had that credit card for 10 years. If it's showing as the zero or not there anymore, that could affect your credit because that's your longevity. So I think it's 10 or 15% that reports to your credit report each month of how
Really?
long you've had credit.
Wow. Okay, see, I didn't know that. That's interesting. Now, what if they keep it under 10%?
So that's good. So you want to keep it under 30, ideally 10% each time. And then I think we talked about this the other day. You want to make sure you pay your payment by the due date, but also go to your credit card statement right now and check your statement date, which is the period where it's open and then it closes. That date, you want to either make sure you make another payment or you get your balance down because that's the amount that's going to report to the credit bureaus.
Mm. Now, is there a way to like waive the interest rate on those credit cards that you have had for a long time?
That I do not know because it does vary on the credit card company.
Mm. So every credit card
Hmm.
is different.
They're different.
Right. Got it. Got it. Now, is there any other tips for people to grow their credit?
I would recommend so everything we went over, but also using credit, getting the credit cards right. That's I think that's the number one thing I teach people and encounter is utilizing the credit and then being responsible with your payments because like you experience a late payment can drop you drastically. But for someone fresh out the gate and they're looking to build is don't be scared to use your credit but be responsible.
Okay, cool. Now, give us a little summary of what we just spoke to in here today. Now, most people don't understand the language, right? So you got interest, you got inquiries. What else you got?
The payment history, the longevity, how long you've had credit, how long, so you want to start as soon as possible because by the time you are ready to purchase a house or car or anything, you already have credit established. Um, your lines of utilization, so how much you have available to you, and the more that you use the credit cards, they're going to increase your balance and make more available to you, which makes your utilization better because you want to stay under 30%, and the higher your credit cards get, um, the more money you can have on there, right, without having negative remarks.
Right, right.
So utilization, payment history, the length of the credit, and just good habits and being responsible with it.
Nice, nice. So what do you consider like a good credit score average?
I think, like, I mean, if you think about purchasing a home, usually the loan and mortgage companies are looking for a 640 or above. So a healthy credit, I would say, would be in the 700s.
Okay. Huh. Interesting. Now, what are some of the biggest main reasons why people need credit in America?
You need credit for everything, right? And then some of us learn we learn about it when it's too late, when we need it and we don't have it. So that's the biggest thing. But I mean, you need it to purchase cars, to purchase homes, to establish those lines of credit with credit cards. And those are like emergency funds because the average American doesn't have $1,000 saved up. But if you have access to your credit cards, it's an emergency fund,
Right.
right? So that's huge.
Wow. That's very interesting. Now, we're gonna close it off with this. Is there anything else you would like to share to the audience?
Just get your credit right.
That's it, guys.
Get it right.
Yeah, get it right. And if you don't know how to get it right, like we said, keep watching the video over and over, subscribe, share, and just reach out to a financial professional. Reach out to her. If someone wants to reach out to you, where can they reach out to you?
So I can be found on Instagram. My phone number, I can share my contact phone
Yeah, go
number.
ahead. What's your phone
That's
number?
so you can reach me at 559-358-5556. And then I actually have a new website launching soon, so I'll be able to plug that in.
Perfect. What's your Instagram?
It is at underscore A111 EXANDRA.
Well, there you guys have it, guys. Thank you guys for watching. Thank you for coming. God bless you. And God bless you as all. Take care.